Hello, good afternoon, and welcome to HYCM's webinar, the FX Week Ahead, with myself, Giles Coughlin. I'm a currency analyst at forexlive.com, and I'm going to be taking you through what's coming up in the coming week. And there's a lot of exciting things on this week, particularly on Wednesday, and a lot of geopolitical issues as well that are in the background. So we're going to be covering those and looking at some of the most interesting opportunities that are ahead in the markets. Now, I'm just saying hello to folks as they're arriving. Hi, Bobby, Chandra, Emily. Yeah, Fernando, welcome back, guys. Medina, Mohammed, Raj, Ramjan. Okay, that's great. Welcome to you guys. If you can just let me know that you can hear me okay. And if you've got any questions during the time, just you can type your questions in and just chat, and I'll try to get through them at the end of the webinar and try to give you guys an answer to any questions that you have. Well, thank you very much for attending. I'm looking forward to the week, and the first recap that we're going to be doing, as it has been typical for the last few months, is geopolitical issues, because geopolitical issues across the world are having tremendous impact on the foreign exchange markets, and particularly at this time, huge impact. You just got to think of Brexit, the US-China trade war, NAFTA. There's so many different issues going on at the time. So we're going to look at these issues one at a time. Now, the first issue to look at is Brexit. Now, Brexit is all to do with how Britain withdraws from the European Union. And just as a quick recap for those of you who are sort of catching up on this issue, Britain voted to leave Europe. There was a referendum. Britain voted to leave Europe, and now the whole process by which Britain leaves Europe is full of controversy and difficulty, and we are right at probably the most intense moment of negotiations between Britain and Europe. And last week, what happened on Thursday, Britain's Prime Minister Theresa May went to Salzburg in Europe and met with all the European Union leaders, and Theresa, it went very, very badly. And as a result of how badly that meeting went, there was a large drop in the pound on Friday. Now, on Friday, I was working on the London session for forexlive.com, and I was reporting on that live as it happened. And you can see here that I was saying, first of all, saying, look, the pound is selling off from that 200 moving average. We'll look at it in a minute, but there was something going on, and we looked at the 50 moving average as a place to define risk for the fall in the pound. But the pound fell about 1.2% on Friday. I'll just show you it more clearly here. This was a rejection for the 200 moving average. So that was Thursday. Price sort of found resistance up against that 200 moving average. And then the fundamental reason, the drop in the pound, was all to do with how badly it went for Theresa May as she was negotiating in Salzburg. And Dominic Raab was on the news, and then Theresa May made a special announcement on Friday at 1:45, and then that was delayed a little bit. And during that announcement, Theresa May actually said, no deal is better than a bad deal. So relationships have gone really, really strained. So the pound is at this kind of key point, and you can see it's kind of hit the 200 moving average and then broke through the 100 moving average, didn't get as far as the 50, and now is trying to make its way back above the 100 moving average. So there's a kind of a containment in price at the moment. And the thing for you to be really aware of is there's continual headline risk trading the pound US dollar pair at the moment. So if you're trading the pound US dollar pair, you need to be aware that at any moment there could be a headline that comes up, and it could be either positive for the pound or it could be negative for the pound. Now, in terms of where things are going politically, just to help you, the Conservative Tory Party Leadership Conference is taking place on the 30th of September, so about 6 days' time. So in terms of the rhetoric, this is the time when Theresa May is going to be most, strident, ardent. She has to rally a group, her own Conservative Party together. She's got tensions within the party. There's the group that want to exit, the Brexiters, the hard Brexiteers, and then there's the group that wants to remain within her own party. And she has to kind of marry these two different competing parties together. So just to be aware that she's going to be quite firm and strong in the lead up to the 30th of September meeting. And it's March 2019 is the final deadline. And the deal needs to be kind of pretty much done before December. So in the next few weeks, there's going to be continual headline risk. They're getting close to it. Oh, they're not getting close to it. The big problem, of course, is the hard exit from the hard border between Northern Ireland and Southern Ireland. That is the real sticking point, and that's what the EU aren't prepared to compromise on, and it's what Theresa May is not prepared to compromise on. So the issue regarding the border in Northern Ireland is very, very difficult. It's politically charged. There's been tremendous difficulties between Northern and Southern Ireland over the years, which many people will be aware of. So it's a complicated issue, and to get it wrong, it could become volatile, and it's have to handle it very, very carefully. So how to deal with the border between Northern and Southern Ireland, again, is a key sticking point. So what you want to start to look at now is to look for news headlines that shows how close the deal is to getting done. So looking longer term, you can see that the pound has been recovering a little bit in the last few weeks, because the general consensus is that there will be a deal done. Okay, that's the general consensus. So you can see over the last 1, 2, 3, 4, 5 weeks, price has just slowly been rising. Now, price found resistance against the 50 moving average here last week, and you've got the 100 and 200 moving average above. So there's a lot of resistance ahead for the pound. And I'll just show you the commitment for traders report. And the way you use the commitment for traders reports is you look for positions that are in a contradiction to the fundamental picture. Now let me explain how to look for that, and I'll show you with the pound, because you can see that in terms of the pound is 79,000 contracts short. Okay, so you can see here how many contracts short. It's the most amount of shorts since May 2017. So the market is net short 79,000 contracts, and some of those shorts were trimmed at the end of last week. They've been added to in the week. Okay, so looking at the chart, what this shows you is that the majority of traders are short the pound. So when you get this recovery in the pound here, what you know is that all those short traders are underwater in their positions. Their positions, if you entered a short here, 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 or here, you're going to be underwater. You're in a drawdown. So that's a very uncomfortable position to be for a trader. So what we want to look for is we want to look for a sign of something like, the EU and Britain have found a way to solve the border problem between Northern and Southern Ireland. And then you want something like from Northern Ireland or from Southern Ireland's minister saying, yes, we think this is a great idea. Something like that would see a very quick rally in the pound. And you see all those people who are short would all of a sudden be closing their positions, and then that just pushes price further up. So we're looking for a resolution in this deal. And if a resolution does get done, there's a lot of weakness in the pound that is all to do with the Brexit negotiations. So on the intraday charts, this is when you're just trading, day to day. Look for headlines. Here there were two opportunities to trade headlines. There was one here which I flagged up in the morning. I could just see weakness. There was some rumors going around that Theresa May had a big announcement, that Salzburg went very badly. The negative sentiment was in the market. And 100 moving average there, that the breakdown and the retest, that would have, the break of that low would have provided a good entry. Again, here you had the 100 moving average. There was some more news here, and I think that was the news saying that Theresa May is going to make an announcement. What she wasn't going to make an announcement at first, and then she was. It was a little bit of a a carnival, really. What's happening? What's going on? It was obvious something was afoot, and so traders obviously used that 100 moving average to lean against. Price moved up, and then it sold off. And then as Theresa May gave her announcement on Downing Street, it just became clear how badly Salzburg had gone, and the pound sold off. It has since recovered today, so keep ahead and look on to see what the latest deal is with Brexit. But remember, the pound is, and looking through this week in terms of data, there's hardly any data out, and even if there was data out, it's not really going to be influencing the pound tremendously at the moment compared to the Brexit headlines. So that is really the large issue for the pound US dollar pair at the moment. So that's what you need to keep at the forefront of your trading and your forefront of your mind. And you've got price now, even as we speak, you've got price sort of just breaking above the 50, 100 moving average. Price moved down, tested it, and is moving again to the upside. So that's just an interesting crossroads. Have a look there to see how price reacts around these moving averages, and then look at that in relation to headlines. Okay, and then you can find that you can use very good places to put your stops. Like you can see here, if you're trading these headlines, you got the break of that area, your stop is above there, you're playing it down here. Okay, you would have seen price stall there, you might have taken profit at the 100 moving average, you might see what's going to happen. Okay, price moves through there, and then 200 moving average, and then you're broken through there. So you look at the relevant places to manage your trade. We can maybe cover that another time, but that's just a rough outlier for you. The next big geopolitical concern, of course, is the Turkish lira. That's one we've been following for some time. Now, the Turkish lira, this again was the Turkish Prime Minister Erdogan had been reluctant to raise interest rates. Finally, the central bank stepped in for Turkey. Interest rates were increased, and the Turkish lira appreciated as they raised interest, about 6 or 6.75 basis points, a big impact. And the US dollar has been weakening a bit recently. There was a bit of risk on sentiment that came into the market last week. We'll talk about that a bit later. But for now, I just want to point out the US dollar Turkish lira pair. Now, this isn't really a pair to trade if you're a beginner trader, and that's mainly because the spread is quite large. So you need to remember that if you are trading this, the spread is very big, and so you need to cut down your position size a lot in order that you don't get stopped out on a smaller move, which is very possible with this pair because of the size of the spread. But just looking at it, it's in a wedge pattern. So you can see that technically price is coiling up into this very tight pattern. And what tends to happen from a technical perspective is that will break. And when that breaks, there's often a retest of that old trend line, and then price carries on. So watch for the break of this. If you had to put your money on it, you'd think it's going to break to the downside because of the risk on sentiment that's entering the market, and the emerging markets are doing a bit better against the US dollar with the risk on sentiment coming into play. So just look at that pair if you're interested in trading it. Wouldn't recommend it, but if you do trade it, I just wanted to flag that up to you because of that key technical issue that's coming up. Next on the geopolitical list is the US-China trade war. Now, President Trump had been threatening to put tariffs onto China for some time. Those tariffs have been put into effect as of today, the 24th of September. China at the moment they're being pretty conciliatory. Look out for any retaliation from China. So last week, when the tariffs the market kind of fully embraced the implication of the tariffs, it was quite surprising because there was a huge relief rally actually. And it seems that the general play this year has been whenever President Trump does something like a tweet or something really kind of extreme, the general play has been to fade what he's done. So this was another example of that sentiment being faded. And the market sort of was rallying quite nicely, particularly some of the Asian markets, the Nikkei, the Hang Seng, the Chinese equity markets as well. They were recovering on the back of last week, and so the market kind of went into a risk-on kind of mode. So you can see there was recovery in commodities, and the Australian dollar, New Zealand dollar, they both recovered. And in particular, I want to draw your attention to, let me just find that, just close that. I want to draw your attention to, just get that's it. I want to draw your attention to the Australian dollar pair. Okay, now the reason I want to draw your attention to the Australian pair, we'll look at the euro yen as well in a minute, is because the Australian dollar saw some good relief from this risk-on sentiment that was going in. Copper really rallied back, massive rally in copper, and similar iron ore appreciated as well. And the reason copper and iron ore, they're kind of, iron ore in particular is almost like a proxy for the Chinese economy. Again, copper, these are commodities that are used for expansion, for growth, for industry, and China relies heavily upon them, and Australia exports copper and iron ore. So seeing the recovery in the Chinese equity markets, recovery in the iron ore and copper was kind of asymptomatic of the risk-on sentiment that's going in. So the reason I want to pull Australian US dollar up to your attention is because there was a key technical position that the Australian dollar was in, and it was here at 0.7300. You can see that there's this large downward trend line here, and it intersects with horizontal support here at 0.7300. And so price found some sellers there. So technically that was a place to sell, very good place to sell. You could just enter there with your stops just above the high, and you could make a play down to the low. But fundamentally, things are looking quite good for the Australian dollar. If the risk-on sentiment improves, copper keeps appreciating. Let me just have a look at what copper's doing today. So copper's just down 0.16% today on the day, so pretty flat really. Nothing particularly to mention with copper today. But if we see copper appreciating, iron ore appreciating, the risk-on sentiment coming up, that 0.7300 level looks like it could easily be tested. So potential ways to play that, if that risk-on sentiment carries on, the ways you could play it is look for a break above the 50 moving average. If that sort of closes to the upside, you could look for a test down the 50 moving average, stop down below the low, see how price reacts on the trend line again, and then if price reacts okay, then the next target would be the 100 moving average, which is the horizontal level through here, and the next resistance. And so there are places for you to look at defining, limiting your risk. But as I say, the fundamentals are looking quite good for further upside for the Australian dollar. But remember, if China retaliates with the trade wars and says, we're going to retaliate and we're going to do something, that really is going to hurt the US or really annoy the US, then the US is just going to say, right, yeah, we've put tariffs on $200 billion of your imports, and now we're going to put all tariffs on all the rest of your imports. And then in a scenario like that, you're going to start to see the Australian dollar fall. Again, the euro yen is a really good pair for the risk on sentiment. You can see last week with the risk on coming into the market, there was strong buying pressure on the euro yen, and if that carries on this week, that sentiment, look to buy on dips. So you could look to buy on dips, retraces back to the 100, 200, maybe you've missed that one now at the 50, and then the 4 hour, again looking at the 50, 100, 200 moving averages would be places to carry on if that risk on sentiment enters the market. Now let's have a look here. Yeah, sorry about that. There we go. Okay, so next That's copper, iron ore charts. NAFTA. Now, again, NAFTA is on the back burner for this week. There isn't anything particularly scheduled that's looking like NAFTA is going to get finalized this week. But the pair to look at for the NAFTA deal is the US dollar, Canadian dollar pair. Now, the Canadian domestic economy has been going really good, and the next meeting for the Bank of Canada is expected to be a definite rate hike. So the Canadian dollar is gently being bid, but the NAFTA deal hasn't been finalized yet, so it's still up in the air. So looking at the near-term direction of US dollar, Canadian dollar, you want to be looking for headlines from the NAFTA deal, and that will help set directions. See, at the moment, price is just finding some support on the 100 moving average on the weekly chart, and on the daily chart we can just see price is broken through the 200 moving average, and that seems like a fair place. Like, it looks like the NAFTA deal is going to get done, so the market is beginning to position for a NAFTA deal to get done, but there's no guarantee it will, so you need to be aware of that. And if all of a sudden it looks like, if negative headlines come out for the NAFTA deal not getting done, you're going to see the US dollar, Canadian dollar pair appreciate. And similarly, if the deal is done, and say you're on the charts, you suddenly see, okay, NAFTA deal gets done, price will easily rally down to the 200 moving average here. So, if you were just on the charts and all of a sudden the data came out, you could enter with your stop above the 100 moving average and make a play with reasonable confidence down to the 200 moving average. Now, again, that isn't advice. This is all education. There's no way that I'll be taking all of these kind of trades, but I'm just highlighting places where you can define, limit your risk, trying to give you some education and ideas about how to trade the markets and how to marry the fundamental issues together with the technical issues, because that's where you really get the high conviction and the high probability trades, is when you have the technicals and the fundamentals coming together. That's what you need. That's why I spend a lot of my time reading news feeds, reading Reuters, reading Bloomberg, listening to the Squawk, because I want to find out what's happening and I want to see what's moving the markets. And that's what all professional traders do. They're studying and listening to the news. There's very few traders who just look at the technicals on their own. So, with the geopolitical issues covered, the next thing to do is to look for the week ahead. Now, the week ahead. Now, coming up this week, it's going to be Wednesday where you get a lot of the news. Today, we've got Draghi speaking, and it's not really expecting for Draghi to say very much today. The issue for Europe is fairly stable. There should be some modest improvements in the core inflation data that's out at the end of the week. So you see on Friday, I'll just zoom down to that. You can see there is some inflation data out on the Friday, expected to be 2% year on year and expected to be 1% year on year for September. And you can see that's in line with the previous data. So it's just expected to be steady, and the ECB at the moment is on a fairly predictable path. And what they're saying is that they're going to be keeping rates as they are until at least summer 2019, and they're slowly winding back their quantitative easing program. So the market's priced that in. I'm not expecting a huge reaction from the euro-US dollar pair this week. However, Draghi speaking, so just bear it in mind. Any deviation from that path is likely to see a reaction. Nothing expected much from the monetary policy meeting minutes on Monday evening. Going through to Tuesday, we've got Bank of Japan, Kuroda speaking. Again, nothing expected, but worth having on your headline, sort of thing that could move the markets if there's a deviation from the Bank of Japan's current monetary policy. They've been in the same monetary policy for so long now. The chances of them changing is so low, but just keep an eye on it anyway. It's worth having it on your radar. Wednesday is the busy day, and it's a day to really look at Now, first of all, if we look at crude oil stocks, it's worth having a look at oil. And the reason it's worth having a look at oil is because on Friday, there was reports that production had declined in August due to the falling Iranian supply. Okay, so there was the US oil pair was bid, because as supply falls, you know that there's more demand in the market for, well, the same level of demand. It's just going to increase the price. So the decline in production meant the price of US oil was bid. But then there was a headline that came out saying that countries were discussing about a 500,000 barrel production increase. I'll show you here on the charts. This was, again, I was covering this session for forexlive.com. I just knocked off and I just saw this headline. I traded long from the test of the 100 moving average. I just entered here, just put my stop above there, took half a position off halfway, and took my second half a position here just around 71.50. And then as I was just on the, I was just about to close down for the day, and I just heard that the OPEC members were discussing increasing production, at 500,000 barrels. So that's saying they're going to put more supply into the market, so that would make the price fall. So there you can see price fell. Traders took profit against the 100 moving average, made its way down to the 200 moving average, and then was bought all the way back up, and support was found here on the 100 moving average. Now, when price opened on Sunday, price slightly gapped up. You can't see it on this chart, and has just been bid all morning. And the reason that's been bid is because OPEC met on the weekend in Algiers for the World Oil Outlook 2018 meeting, and there was no mention of increasing further production. So the market was slightly relieved, and oil was getting bid. So just keep an eye on oil. At the moment, I'm expecting oil to be bid, and I don't think that they're able to actually put as much supply in the market as they're saying. I think with Iran falling off their production, Venezuela's production has been falling again all year. So it is difficult to replace those falling production levels. So I think oil is going to be bid. But President Trump has a habit of tweeting about how he hates high oil prices. So again, like trading the pound US dollar, you need to be aware, if you're trading crude oil, what the headlines are. Keep an eye out for Trump, keep an eye out for OPEC news, and these present opportunities and challenges. So it's two sides of the same coin. Then we go to FOMC. We've got the Fed, and we've got their monetary policy statement. We've got their interest rate decision. We've got Powell's speech. This is a really hotly widely followed event. The Federal Reserve is the most influential central bank. All the other central banks look to the Federal Reserve to set their own policy. This is the largest central bank in the world, and they're meeting, so it's a huge event. And what's typically expected at the moment is it's typically expected for them to raise their interest rates this meeting, and it's expected that they'll raise their interest rates at the December meeting. So you can see the probability for interest rates is currently 175 to 2, and it's expected to increase to 2 to 2.25, a 92% chance of increasing rates, and a 78.6% chance of increasing rates on December. So 2 rate hikes are pretty much priced in. Then there's 3 rate hikes which are anticipated for next year. So what you need to do is to have a look at those rate statements. Do the statements, the monetary policy statements, Powell's speech, does that indicate that that's the path they're going to carry on? Okay, and the dot plot, there's a lot of talk about the dot plot, and this is the board members where they see rates in the future, okay, where they see rates in 2018, 19, 20, and the longer term. So that is one that's hotly and widely followed. So they are the things you want to factor in when it comes to trading your event. Now, looking here at, let's just look at the chart. So we'll look at the dollar yen. And one technique which you can use, again, this is not trading advice, it's education. But when an interest rate increase is expected, often the market will spike on the news. So US dollar, Japanese yen, if there's an interest rate, what can be done is you can enter the market like 5 minutes before the rate hike meeting. Just put your stop in a sensible place. Price spikes on the interest rate decision, and then just close your trade immediately, because often you'll have a trade, buy the rumor, buy the rumor, sell the fact scenario. So that's one technique that you can use. And what I'm looking to do is I'm looking to go long on the US dollar Japanese yen pair into the meeting, and I'm looking at places like the 50, 100, 200 moving average to get long on the 1 hour and the 4 hour chart. I may not get it, we'll see, but that's what I'm looking at for this coming week. And when you have the Fed meeting, what you need to look at is if there any deviation from what's expected. Remember what's expected: 2 rate hikes are factored in for this year and 3 for next. If there's any indication that it's looking different, then you're going to see the dollar shift. Now, if you're not entirely sure what's expected, if you follow a good currency analyst, you will quickly see what the market analysts and commentators are saying, and then you'll see if there's a big deviation from what I've said there, then you're going to see a reaction in the dollar, and that's as market participants move and change in line with where things are going. Must mention the Reserve Bank of New Zealand. They are meeting, and I wanted to show you this. You got the interest rate decision. Now, interest rate decision is expected to be exactly the same. But what market participants are going to be following is a policy statement. Now, this was the last policy assessment that came out of New Zealand, and this was in August 2018. They said, yeah, the rate remains the same, but we expect to keep this level through 2019 and into 2020, longer than we projected in our May statement. That was a big flag to the market, and the New Zealand dollar was sold on the back of this statement. It was on the back of these words here: longer than we projected in our May statement. So the New Zealand dollar was sold off, and they went through a number of reasons why they decided that they're going to keep their rates lower for longer. And that was because, look, here's where they gave their reasons. Risk remained to our central forecast. The recent moderation in growth could last longer. Low business confidence can affect employment and investment decisions. Low business confidence, okay? Conversely, if there is a chance that inflation could increase faster, if cost pressures can pass through into higher prices and impact inflation expectations. But it was this low business confidence. So that's relevant because we have business confidence rating out here. So just, it's low level on the calendar, but the central bank are focusing on it. So have a look when that comes out at what kind of rate it is, because if that is low business confidence, and if that comes out as, let's have a look at it here, you can see, look, you see in 2018 they were concerned, minus 50. It's as low as almost, look, 2008 levels, 2009 levels. In fact, that's the lowest at August level. It was the lowest since 2008, 31st of March. So you can see what Governor Orr is concerned about there. And so have a look at that, and that will give a good indication of what's coming up. And that's a sort of scenario when you can take positions into the rate statement, because if low business confidence was the reason there were going to be lower rates for longer, and then if all of a sudden that's even lower, okay, that Governor Orr is almost certainly going to say, yes, we're going to stay lower for even, they might even say lower for even longer. Now, you've got to balance that with the relief in the US-China trade war, which has seen a rally in the commodity currencies, including New Zealand dollar. So you have to hold these together and make assessment as you go. These are fluid, moving areas. Okay, Thursday, there is not a whole load. Germany is obviously important for the EU because it's the largest European member state, so it's worth having a look at. not necessarily massively important. So it's 1.9% expected and 1.9% previous. So that's expected to be steady. Only going to have an impact if it's a big difference. Again, Draghi speaking, we've already covered the things to look at in Draghi speech. Got Powell again, that's worth looking at, because if the market reacts wrongly to what happened on Wednesday, this is Powell's opportunity to set it straight. Pollot speaking, always worth listening to Pollot, because he can surprise the market. He's done it in the past. He could do it again. But again, the thing for Bank of Canada is it's all about the NAFTA agreement. And if NAFTA agreement doesn't get done before the Bank of Canada meets their next meeting in October, will they hike their rates? That's the big question. So that's one to follow, a story to follow. Look at Pollot, see what he says. And finally, Friday coming in, we've got a CPI data coming out for the Eurozone, expected to be 2%. Expected, 1% expected, so no surprises expected. So again, look out for any surprise. CPE expenditure from the US, that's not as important as the rate hike meeting that's coming on. But again, look at that and see if there's any. There's been quite a lot of that's been increasing. It's been a steady uptrend. So if that continues on that path, traders will be looking at what path is consumer spending going on. Nothing particularly for the rest of the week. That is the week that we've got ahead of us. If they've got any questions, guys, apologies for running slightly over time, but if you want to type any questions, I can see if I can help you. I'm in the middle of moving house at the moment, so I'm glad to have been able to get this webinar out to you in the middle of everything. Any questions? I'll spend a few moments just checking here, and if anything I can help you with. And one thing that I will draw your attention to is on the HYCM webinar, what is a good resource that I've done. And this is particularly, obviously I cover a lot of fundamentals on my webinars, and if you want to look at good ways to define and limit your risk, how to combine them with a technical analysis, I covered a lot of technicals on this webinar that I did: support and resistance, drawing the correct levels, how to view them properly, just ways to help you define and limit risk. Again, it's not trading advice. This is education to help you to learn how to trade for yourself, to make your own decisions, so you're not relying on anyone else. But of course, everyone needs a hand and a leg up. So if you have a little look at that, that will help you start to give you some basic tools to make your own decisions. Okay, guys, I think we're okay. We haven't got any questions. I hope that was clear. And I look forward to seeing you guys next week when I'll be in my new house and my new office, which I'm really looking forward to. And I'll see you on the 1st of October for another week ahead, at the same time and the same place, 12:30 to 1 o'clock. And I hope you guys all have a really good week. Thanks now. Goodbye. Oh, thanks, Malcolm. Great. I'm glad you appreciated that. You're very welcome, and we'll be here. Yeah, thanks, Raj. That's great. That's good. Good to get a bit of feedback. It's hard when you're just talking one way. You don't always know if the information is going in, but I hope that's given you guys some really good things to look at for the coming week. Have a great week, guys, and I hope to see you next week. Goodbye.